Welcome to Markets Now. I'm Michelle Rock along with Mike Miner with Professional Ag Marketing, and we're seeing mostly lower prices this morning with the exception of the soybean complex. And Mike, let's talk about soybeans since they're the lone uptick in the market this morning. How much of that is just a little bit of change in these extended weather forecasts?
I think a lot of it has to be because really at the end of last week, the WASD report that we got, we had a pretty rough close at the end of this last week on Friday. So seeing a little bit more support with heat in the forecast out there, I think is helping on the soybeans, which are made in August. So maybe just a short term pop here because really I think the boots on the ground have been wet so far. And when it comes to August weather, we've been experiencing some very favorable weather so far for soybeans, I think.
Yeah, and we got a little bit more export business this morning, over 15 million bushels. Do you expect that we're going to continue to keep seeing that export business come at the market? Because we've got some catching up to do there, don't we?
We do. It's coming around to the time of the year where we usually put on a lot more new crop export sales. We're kind of in the strong vertical trend now compared to normal. We're behind from where we need to be, especially to hit some of the USDA numbers, I think. So hopefully we can continue to gather some momentum here on the export markets for both corn and soybeans.
Yeah. And corn, actually, when we talk about weather, it's a little bearish near term here. And that is kind of a drag on this corn market this morning.
Yeah, I think so. When you start looking about some of the support levels that we've started to trade back down to around this 481 level, seeing those hold are going to be very important going forward here. And we're going to need some new bullish news to help pop this market. Maybe it's China and their weather problems. Maybe it is this, late heat that's going to try to spark some weather buying for some reason. I think we're going to need to see that and demand. I mean, ethanol numbers have been pretty fantastic too. So we're going to need something to spark a fire under this corn market once again. Otherwise, it's going to be a tough road.
Yeah, you mentioned China business, and there's certainly been a lot of rumors that they're going to need to come in and buy some U.S. corn just because they've had a lot of flooding up in the north, haven't they?
They have. And looking at the price disparity between the United States and China right now, seeing a $5+ difference is going to definitely incentivize them to make some purchases, whether that's the United States or Brazil. We've become a little bit more competitive now, and we make a lot of sense logistically when we start talking about a shortness when they weren't really expecting it. We're pretty good about filling into unplanned gaps. Let's put it that way, Michelle.
Gotcha. So let's talk about the fact that we got lower yield in the WASD on corn on Friday, 2.4 bushels per acre, but the market kind of faded that. Now, is it because you think that we are going to see bigger yield going forward? I mean, you just came back from your own crop tour, and what did you find?
Definitely. I think when the USDA had taken their yield estimates, I think we were still in a situation where we hadn't experienced any August rainfall yet. So when you're looking at, 2 weeks to a month ago, and if I would have went out, I would have seen something very different, I think, on my crop tour I took. And so seeing the USDA pull back their yield numbers to near a 175, I think makes a lot of sense. Now, I think the trend going forward is going to be important because you saw it in Friday already. We saw the prices start to really pull back, and I think that's just the weather, the rain that we've been experiencing. So I think that was the smallest yield number you're going to see out of the USDA this year, and you could see that trend higher. Are you going to be able to break it much above the record? Probably not. I think Indiana is really the only state I saw that has a real good shot of making a record yield, and the USDA thought so too. So that's going to keep that top side limited somewhat. So like a 177, 178 maybe, but the 181 trend we were originally hoping for, I think is pretty far gone at this point.
So, Mike, how many acres did you cover, and what did you come up with for your average corn yield?
So we traveled 2,300 miles across the United States, about 8 states that we really took yield samples from through the Corn Belt, all the way from South Dakota and North Dakota down to Missouri and then over to Ohio and back. So what we had found was a 176.2. And I thought that number was growing, because we took it at the beginning of August. So that's subject to change a little bit. And I do think that a state like Nebraska that I was just under 180. I think that has a shot somehow after the last couple of years of having awful yields and awful drought stress, and even started the year that way. They still have a chance at a 180 plus yield, I think. So they're going to be a X factor. And then Iowa is a really big one too. The eastern part of Iowa is extremely dry, so it's almost flip-flopped from last year because now the
Yeah.
western part of the state's going to have to try to make up for that eastern part of the state. So that stretch from Cedar Rapids to is somewhat like Albert Lee, Minnesota, is pretty rough still. So keep an eye on that area, any rainfall they may get, but the yield estimates coming out of the field are going to be incredibly important in that region.
No doubt. I've been hearing as well from farmers that it's a complete flip flop in Iowa from last year. Cattle market. We've been seeing a little consolidation here this morning. We had steady to even a little firmer cash trade in the north, but the market has kind of already worked that in, right?
They have. The southern market and the cash market was very quiet last week. Hardly anything got
Yeah.
traded, but right around that 180 level, and that's right around where the August futures are at today. So maybe if we get past this time frame here a little bit, we could see October gain some premium out at 181 if we continue to trade cash higher here. That's going to be something to watch out for, I think, going forward. Otherwise, the cattle market's in an incredible lull right now. Not a lot of new information coming out at us. When we look at the world stocks report, they forecast more beef than previously expected for 2024. So larger placements of cattle this fall, but I still think you're in the snowball effect where you're still taking away from the cow herd a little bit, and we haven't started to really retain any heifers quite yet. So keep an eye on that going forward.
Yeah, supply is going to continue to be tight, and technically we're
Mhm.
still in an uptrend here, so this is kind of a healthy correction then.
I think so. I'm not too worried about it at this point.
Gotcha. What about the hog market? We have started to see that market roll over a bit seasonally here and cut out values. Is the rally over there, you think?
A little bit. Now, part of the rally and cutout that we've got to talk about is it's mainly all been in the bellies. So when you look at the belly rally that we've had, in just the month of July of $100, that's made up for about $16 in the cutout as an overall. That makes up about 16% of it, for example. So when we look at that and see that cutout only went up 11 during that time frame, the other primals are really pulling back from that belly market. So I would say the bellies just had to make up for some lost time because they were lower earlier in the season, and that's where most of this rally has come from. And from a seasonal perspective, I think this all makes sense. I think it's been extremely exaggerated. So I think that's what we look at from a seasonal perspective and see where this cutout and the demand stories really come from. And going forward, from a seasonal perspective, it's pretty tough to shoot or hope for too much more out of this cutout at this point.
All right. But we get August off the board today, and you got big discounts in the back months. So does cash come down to meet it, or do they meet in the middle, or where does it go from here?
Yeah, because there's a large premium to the October. So that's going to take me into my supply situation right now because you are seeing lighter weights. And it's not necessarily because we've had abnormal weather here real recently. I think it's because we are pulling some hogs ahead. And we've ran slaughter a little bit higher than what was expected, maybe 1% higher year over year. So from that perspective, it totally makes sense looking at the discount in October going forward to see producers really pulling ahead some hogs. And looking forward, I mean, we still have to keep demand in check. If we can continue to keep cutout around these levels, I don't need a rally out of it at all. If we can just hold some levels, we can continue to try to bring up those deferred months. But the market's in a very prove it to me attitude right now with those deferred months in the hog market, and we've been able to get some sales on this last rally, get a little bit covered up to December, or the first quarter of 2024. But past that, there is very weak coverage, I think, for the average hog producer, and weak opportunities. We really haven't seen a whole lot out there yet. So we are looking forward to trying to get another rally at some point, but it might be a long road here in the near term.
All right. Thanks for joining us. That's Mike Miner with Professional Ag Marketing and Markets Now.